In this example, we're looking at the purchase of merchandise using the perpetual inventory system. So keep in mind with the perpetual inventory system, in doing purchases, we will use the merchandise inventory account. So the first thing, it says on August 2nd, we purchased merchandise on account from Vera Company, invoice dated August 1, terms N10, FOB shipping point 1,150. So terms N10, remember, says that we have 10 days to pay this invoice in full. FOB shipping point means that at the time the purchase is shipped, the ownership now is transferred at the shipping point to the buyer. So the buyer is responsible for the shipping cost, and we in this situation are the buyer. So I purchased merchandise. So I'm going to go to my merchandise inventory on August 2nd. I'm going to put the dollar amount of $1,150 that I purchased. And it says that I purchased on account, so also on August 2nd, I will credit or increase my accounts payable account for $1,150. Then on August 3rd, it says we received a bill from the shipping company for the transportation cost, so that $1,150 did not include the shipping cost, and now we're getting a separate bill for the shipping cost of $105. So once I receive the bill, I now owe the payment for the shipping. And since I'm the purchaser, I'm bringing the shipment in, so we use the account freight in on August 3rd in the amount of $105. And I owe it because I've only received the bill, so also on August 3rd, I will credit my accounts payable for the $105 for shipping. On August 7th, it said that I returned damaged merchandise that was received from Vera Company on August 2nd for credit of $180. So if I return the merchandise, that means I need to take it out of my merchandise inventory. I no longer have it. So for August 7th, I'm going to take out or decrease my merchandise inventory of $180. Additionally, if I send it back, I no longer have to pay for it. So I will also decrease my accounts payable account for $180. Then on August 10th, it says we paid in full the amount due to Vera Company for the purchase of August 2nd and taking into account the return on the 7th. So if I purchased originally $1,150 but then I returned $180, I only have $970 that I have to pay for. So I will decrease my cash account in the amount of $970, and I will decrease my accounts payable account also in the amount of $970. So then when I calculate my balances, I have a credit balance in my cash of $970. What it's not probably showing you here in your cash account is I probably have a beginning balance in there instead of having a negative cash balance. So then we look at our accounts payable account, and we have to foot and balance. So to foot, we take our $1,150 plus our $105, and our footing is $1,255. Then on the debit side, we take our $970 plus our $180, and we get $1,150. So the balance then is a credit of $105 in my accounts payable account, which represents my freight or my shipping costs that I haven't paid yet. So the balance in my freight in is $105, and the balance in my merchandise inventory is $970.